Now, in terms of what the SEC is doing to encourage inclusive growth, inclusive growth and create job creation as part of their corporate social responsibility, could you talk to us about it? Because I know that the SEC actually started something like that last year.
First and foremost, we at the SEC believe that financially responsible citizens are very critical to the transformation agenda that the president is leading. If we all know how to spend wisely, save and invest, it will be good for us because we can plan for our future education. If we're young people, if we're older people, we can plan for our retirement, we can plan for future health challenges. So having that discipline to spend wisely, to save and invest is something that the SEC is keen to ensure that the average Nigerian is very familiar with. So in that respect, we've come up with a number of financial literacy programs, some of them very interesting. The ones that are my favorite ones are the ones that we leverage what is unique about Nigeria. We leverage Nollywood. We have a number of movies. The first one that we sponsored is called Breeze, which is basically a story around the value of investing for the future. We have other short documentaries. One is Easy Money, trying to teach people not to ensure that they don't get taken in by fraudulent players, to ensure that those who they're associated with are registered with the SEC, that are meeting the requirements. We have another one that focuses on mutual funds. As you know, the SEC has been keen over the last 4 years to encourage Nigerians to look at investing through mutual funds as an alternative to investing directly, because it helps you diversify your risk, because instead of investing all your funds in one particular company, you can invest in several companies. Instead of investing in just equity, you can invest in equity and bonds if you're investing in a mutual fund that is a balanced fund. So for us, the financial literacy agenda is one that is particularly critical, because being financially responsible is good for you as an individual, it's good for your family, but it's also good for our nation, because then we can broaden the participation of an economy.
How about broadening the participation of women?
Yes. I'm very delighted about first the role that women play in a family. Those who know me have heard me say often that focusing on women makes good between focusing on men and women, because I think that it's very, very important that you're focusing on your whole populace. But if you had to make a choice, I will choose focusing on women. The reason being because women have a greater impact beyond the fact but women have a greater impact on society. I believe that if there is any single Nigerian that's been recruited to Boko Haram, if the mother had responsibly brought up that child, there is no way that child would accept to be recruited by Boko Haram. So there are wider societal benefits. But I think that there's a lot that we can do, and we don't have to make a difference between being a woman and being a man. There's a lot that we can do to empower our citizens. And so we have a variety of financial literacy programs. We have a financial literacy program where we partner with women and men in the market. We provide free financial health care, partnering with a medical NGO, while we're providing at the same time with the industry, with stockbrokers, with registrars, with fund managers, education about spending wisely, saving, and investing. So I think it's, in most families, women hold the purse on behalf of their husbands. So empowering women to manage the funds of a family much better is very, very critical. Even in certain sections of our society where there's not as much appreciation of the value of women, I say to those people, think about it. What about in the unfortunate circumstance that the breadwinner, the man in the house, passes away, you want to make sure that your wife and children are able to fend for themselves. So making sure that we empower the citizens of our country is critical, whether male or female.
Now let's look at, it's the World Economic Forum Africa meeting. Let's go outside of Nigeria. Let's look at the region generally. Africa's capital market appetite seems to have grown, but there's still some challenges facing this rapid and sustained growth. Could you just talk about some of them, and of course the opportunities as well?
Well, I think the challenges are that we need huge amounts of finance, both for public sector and for private sector. I gave the example of our country, where the African Development Bank estimates that on an annual basis, we need about $35 billion to fund infrastructure in Nigeria. Yet our annual budget in total, both for recurrent expenditure, for capital expenditure, is about $30 billion equivalent. This story is the same story across Africa. So first, the needs are huge. Secondly, we need our markets to be deeper. We need our markets to enable businesses, whether they're small or large, to be able to raise capital much quicker. It's for that reason that the regulators in Africa, under the auspices of the Africa Middle East Regional Committee of the worldwide body, the International Organization of Securities Commissions, has been working to try and make sure that our markets have the highest standards, that we really have world-class standards, that we encourage markets that we need, that focus of also on ensuring that we have product offerings, a variety of product offerings, whether it be equities, whether it be bonds, whether it be exchange traded funds, whether it be mutual funds, just so that the variety of products that you have available in other development markets are also available in our markets. The other thing I think that's critical is that our governments across Africa provide the benchmark off of which other institutions can, for example, fund themselves. So one of the things that we've done in Nigeria, which is laudable and which is being emulated by other countries, is to have a bond market where the government has a regular yield curve up to 20 years. So being able to ensure that there is that risk-free rate off of which other institutions, whether subnationals like state governments or whether companies, can also borrow from the capital market. So we're deepening the equities market, we're deepening the bond market as well.